Yo, what up, everybody? This is your boy Sharath. Welcome again to Disruptive Investing Channel, a channel focusing on investing in disruptive technologies by suggesting you companies that are about to change our future. I'll try to educate you, bring you my research, so that you guys can make your own sound investing decisions. But please do note that I'm not a financial advisor by any means, and everyone should be doing their own due diligence. With that being said, let's just get started. The stock that we're looking into today is Pinterest, ticker symbol PINS. The stock at the recording of this video is trading in the range of low to mid 50s, and we have seen this stock dip as much as 25% from its previous month's high. So the question that we're trying to answer today is that if we should be buying the dip into the stock. But before we can answer that question, first let's start by going over the company and its product. See, our eventual goal as an investor is to always understand the business model of the company and how it makes money. But before we jump into that, we have to somewhat understand the product itself, otherwise we would not be able to understand the business model and it would not make any sense to us. So, with that being said, let's just get started by looking into how the service works from an end user's perspective and many of its features to give you a better understanding of the company and its product. At its heart, Pinterest is just an image sharing and social media service designed to enable saving and discovery of information, which they call ideas, mostly using images and on a smaller scale, animated GIFs and videos in the form of pin boards. The home feed is a collection of pins from user, boards, topics followed, as well as few promoted pins from businesses. Another very interesting feature of Pinterest, which makes Pinterest very unique, is its visual search feature that allows users to search using artificial intelligence for elements within images such as existing pins, existing part of a photo, or new photos, and then guide users to suggest similar content within Pinterest database. Pinterest serves the dual role of e-commerce website in addition to being a social media app. It has product pin feature that helps users buy and sell products in pinnable format. Products usually get recommended to users who are looking for ideas and things to buy in a certain category. For our purposes as an investor, it is shopping and advertising feature of this app which is most important to us, as this is how company makes money and also helps it compete with the likes of e-commerce giants such as Amazon or social commerce company like Facebook, which combines the elements of social media and shopping. The feature that I want to talk about and that I am most interested in is Pinterest Analytics, which is very much like Google Analytics. It is a service that generates comprehensive statistics on specific websites' traffic, commonly used by marketers and advertisers. Now that we somewhat understand the website and its feature, we now turn our focus to understanding its revenue generation model. While the Facebooks of the world charges advertisers based on the cost per click model, Pinterest has created a promoted ad strategy that charges the advertisers on engagement or action of the users. This means that advertiser only pays when an existing user engages with the promoted pin. This has the potential to increase the advertiser's return on investment. In addition, with Pinterest's unique use of pin boards, advertisers can also target users based on their interests, personas, or life stages. Doing so gives advertisers the chance to target potential customers on a more granular level than they can on the other social media platforms, which gives Pinterest another competitive edge over its competition. Pinterest's advertising model is more focused and aligned with how a user interacts with the app. Unlike other social media apps such as Instagram or Facebook, where the user's interaction with an advertised product is more passive, a Pinterest user in comparison already comes to the app looking for the ideas and products that it may eventually buy. Therefore, on Pinterest, there is a natural alignment between what consumers are there to do, therefore get ideas and inspiration, and what advertisers are looking to do, therefore enable them to act on that inspiration. So naturally, ads are additive to user experiences. They stand out because they fit in the app's ecosystem, and brands that connect with people on Pinterest are offering the right solution at the right time. That's why it takes half as many impressions to convert someone as a revenue generating user on Pinterest than on any other platform. Another key metric which highlights the revenue potential of Pinterest is that 85% of weekly pinners have bought something based off the pins they saw from the brand in the form of promoted pins, which is another big positive from an investor's point of view. So now that we have explored the business model and feature of Pinterest app and its advertising services, now let's talk about Pinterest's recent price action. As mentioned in the beginning of the video, Pinterest has seen its stock fall from the highs of 80s to current low to mid 50 range within a month, which represents a 28% decline from July highs. and it even fell as much as 18% in just one day on July 29th. So if Pinterest is such a great company, then why did the stock keep falling so much? Well, the answer to that question simply lies in its latest earning report. We have explored how Pinterest makes money from digital advertising, where revenue is a function of number of user and user interactions with the app. And in the recent earning report, we saw less than stellar performance on the user growth front, which was the biggest reason for its massive decline in the stock price. More specifically, there was a decline in number of US users, which slowed down the overall user growth. As we have explored before, that for a company whose entire business model is based on ad revenue, the decline in user is a really bad news, especially in this competitive social media market. However, the same graph also shows that even though quarter-over-quarter US and international user declined, there was still 9% year-over-year growth in the overall user base. So then the question is, why did the stock fall so dramatically? Well, the answer to that question lies in the fact that US users are disproportionately more important than international users, as US users account for the majority of the revenue for Pinterest. $5 per user compared to only 36 cents for an international user. And this is why the market reacted so strongly to year over year decline in US users, which had a negative impact on the ad revenues. However, that being said, there were some positives to take away from Q2 earning report as well. In the same chart, we can see that even though international users account for only small percentage of the overall revenues, but nevertheless, we can't ignore the fact that there was an year-over-year growth of average revenue per user by 163% from 14 cents per user in 2020 to 36 cents per user in 2021, as well as 103% year-over-year average revenue per user growth in its US user base as well, which went up from $2.50 per user in 2020 to $5 per user in 2021. In terms of total revenue, this chart shows an increase from 272 million US dollars of revenue in 2020 to 613 US dollars in 2021, which is over 341 million US dollars increase in revenue in just one year. This represents almost 125% year over year growth in revenues, which to me is quite remarkable. Whether the Q2 earning report is positive or negative is a matter of perspective. The earning can be looked from a positive light if you want to see year-over-year revenue growth, or you can look at it negatively if you only want to focus on decline in United States users. However, we know that the majority of the investors took this negatively, and thus there was a large decline in stock price. Since these earnings represents a mixed bag, I'll try to break down the positives and the negatives to provide you with a clearer picture and some context. The decline in US user is significant and it cannot be brushed aside. And add to that, another big point of concern is that the management abstained from providing third quarter guidance for its monthly active user expectations. And the chief financial officer, Todd Morgenfeld, mentioned that company is not expecting to see an improvement in monthly active users over next few quarters. So it is to be expected that the monthly active users in US will remain stagnant for some time to come, which is definitely not a good sign. Another interesting point is that the majority of the user decline in monthly active users can be attributed to Pinterest user on its web service. These users tend to be less engaged and generate less revenue than Pinterest users who are active on its mobile app. Moreover, in Q2, monthly active users on mobile app grew in the US year over year and also grew by more than 20% internationally. This is no doubt a positive sign. As the low quality users leave on the web service, the high quality users increase on its mobile app. Secondly, Pinterest has seen growth among its younger Gen Z audience. As per CEO Ben Silbermann, user representing Gen Z audience grew double digit year over year. And tapping into Gen Z audience bodes pretty well for any social media app, and this is especially true for Pinterest, as I think it will help it shake out the stereotypical image that it is an app for only middle-aged women. Thirdly, there's a huge potential for future growth in revenues from the international markets. As we have seen from these two charts that currently international users only represents a small fraction of overall revenue, but at the same time accounts for the big majority of the user base. So there is a disconnect between how well Pinterest monetizes its US audience versus its international audience. And also in the international market, we have seen a massive year over year growth in both user base and average revenue per user. a trend which I believe will likely to continue as Pinterest taps further into this enormous international market and becomes more efficient in monetizing its international market. Moreover, even in the United States, the average revenue per user as it stands right now is just the tip of the iceberg, and there is great potential for Pinterest to improve further their ARPU in US as well. You can see from this chart that Pinterest ARPU represents only a fraction of ARPU for Facebook and Snapchat, which are much mature organizations and they're also more mature in their monetization strategies. And there's definitely room for Pinterest to grow further. All in all, the big takeaway from all this is that Pinterest is likely to see big revenue growth in the future, even if its user base remains stagnant in the United States. Besides the two main factors of revenue increase and decline in US user, a third piece of information to consider while making your judgment on buying the dip is company's financial and valuations, and try to get the sense if the company is undervalued or overpriced in the market. The first metric that we will look at for the analysis is price to earning ratio. And based on the latest numbers, the current PE ratio stands at 218 for Pinterest compared to the overall market PE ratio of 18. This is no doubt a very high number and not a very positive sign for valuation. However, one has to consider that PE is actually in its growth phase, and PE ratio for fast growing companies are usually high. Again, a matter of some solace is that at least Pinterest has a positive PE ratio. Therefore, it is at least making a profit, which is not very common for fast growing companies. A case in point is Snapchat, which has a negative PE ratio and it is actually losing money. This here validates my previous point that we should read PE ratio of Pinterest with some context and consider its future growth as well while assessing its valuation. And right here, it does show that analysts are expecting their earnings to keep growing at the annual rate of 41.2%, which is quite impressive. Based on the expected growth rate for earnings by the end of 2023, the earning per share is expected to be around $1.45, up from the current value of 25 cents. Using the forecasted EPS of $1.45 in December 2023 and the current share price of $53 at the time of the recording of the video, we can calculate the forward PE of the stock to be around 36, which is much more reasonable than the current PE ratio. Moreover, the chart also shows a very positive trend from the past where we have seen consistent positive earning growth since 2020 to finally turning the company profitable this year. First of all, let me just state that it is not my job to tell you what you should do with your own hard earned money, but rather provide you with some bases and tools that I use for my own decision making, and then leave it up to you guys to see if my logic and my long term thesis make any sense to you, and then you can make your own sound investing decisions based off that. So, now as far as I'm concerned, first let me tell you that I'm indeed an owner in the stock, and it accounts for almost as much as 10% of my entire portfolio. So, am I buying or selling the stock at these levels? Well, if you're looking for a firm answer, I'm sorry to disappoint you, as I'm doing neither. I am just holding the stock. In fact, at these levels, I strongly believe that it is best to hold this stock if you already own some. As I've shown in my previous analysis, that this company and the stock does present some contradictions of positives and negatives. On one hand, it has a strong business model and a strong case for future growth, but also on the other hand, the decline in user is a bit concerning, and in terms of valuation, it is valued a little rich for my liking, and that's why I'm currently just holding the stock. In terms of my personal sentiment, I'm a strong believer in this company, and I feel like this company will continue growing with strong fundamentals. But my investing decision, or in this particular case, the decision not to invest by not buying the tip, also boils down to another fact which most people don't consider, which is the opportunity cost. At this moment, I feel like my money could be better spent buying other stocks or simply even building up my cash position until any future market correction. But that being said, I will consider buying the stock and adding more to my position if this stock somehow falls below $45 range, where I feel like this would be more fairly valued. And also on the contrary, if the stock somehow shoots up to $75 to $80 range in a very short period of time, then I may even consider trimming my position a bit. But for now, I'm just diamond handing this baby and holding strong. And that pretty much concludes my video. Thank you so much for watching my video and good luck with your investing. If you liked my video and my analysis and would like to see more videos on similar disruptive growth companies, please hit a like button and please subscribe to my channel. And I hope to see you in my next video. Thank you very much.